Messrs. Mehra and Sons acquired a machine for rupees 1,80,000 on October 1, 2016 and spent rupees 20,000 for its installation. Any charges incurred for installation like carriage in whatever it may be clubbed as machinery only. So the machinery value is 2 lakhs. The firm writes up depreciation at the rate of 10% on original cost every year. So you have to calculate 10% depreciation on this. Record the necessary journal entries for the year 2017. Though they have asked only for 2017, we will try to finish off up to the 3 years. And draw up the machine account and depreciation account for first 3 years, given that number 1, the book of accounts closes on 31st March every year, right? So we purchase the asset on 1st October, but the first year ends on 31st March. So automatically you have to calculate the depreciation from the date of purchase to the year end, or if the asset sold up to the date of sale only, you have to calculate. So in this class, in this particular illustration, we have to start the calculating depreciation, start calculating the depreciation from 1st October, and it ends with 31st March of the next year itself, right? 1st October 16 purchased, right? Further, the journal entry being machinery account or machine account debit, machine account debit to bank account, the value being 2 lakhs. Next one will be depreciation to be calculated only by the year end. Financial year ends on 31st March 17. Depreciation account debit to machine account, depreciation account debit to machine account, the value being 10% on that, 20,000. Yeah, here it's only 6 months, 2 lakhs. Calculate for 1 year's depreciation, but this is eligible for only half year. Starts from 1st October, ends on 31st March, half year, 10,000. By the year end, whatever the depreciation amount is there will be transferable to the P&L account. So profit and loss account debit to depreciation. This value being 10,000. And next year, 31/3/18. Now it is eligible for full year's depreciation. The first year end. This asset is used for full year, so we have to calculate the depreciation for the full year. Depreciation account debit to machine account for 2 lakhs, 10% being 20,000. On the date, immediately this value will be transferable to the P&L account. So profit and loss account debit to depreciation. The value being 20,000. 1 full year. First case, it's only for half year. Starts from 1st October to this date. Half year only there. Now from here to here, 1 full year is there. So we can claim the depreciation for 1 full year. Then the third year, 31/3/19. Calculate the depreciation for the full year here. Depreciation debit for full year, the depreciation being 20 to asset account, to machine account. The value being 20. Then this will be transferable to the P&L account. So profit and loss account debit to depreciation. 20,000. Now we can prepare a ledger account also for the machine as well as for depreciation. Okay. We'll start with machine account. machine account. Here is machine to bank. I skip the date here. To bank, the value being 2 lakhs. And here by the year end, depreciation will be 10,000 is going to be deducted from the asset account. So by the depreciation here, the value being 10,000 rupees. After subtracting this, the value of the assets being 1 lakh 90 only. So 2 lakhs. 2 lakhs after subtracting 10,000 rupees, the WDV value by the end of first year is being 1 lakh 90. Balance carried on. Rewrite here as balance brought down. So the balance brought down here being 1 lakh 90. 1 lakh 90. In the second year again, we charge depreciation of rupees 20. So by depreciation, the value being 20. After subtracting the value of the asset being 1 lakh 70 only. 20 is subtracted, now the value being 1 lakh 70. 1 lakh 70. Balance carried on. Balance carried on. To balance brought down. To balance brought down 1 lakh 70. And in the next year again, I charge another depreciation rupees 20. By depreciation 20. After that, the balance being 1 lakh 70. Okay, sorry, 1 lakh 50. 1 lakh 50. To balance brought down. To balance brought down. 1 lakh 50. We have to open the depreciation account. Depreciation account is very simple. Open and charge, and later it is transferred to the P&L account. So first year end, 2 machine 10,000. By the same time, it will be transferable to P&L account. So by P&L account 10,000, it is closed. Second year also you repeat the same, 2 machine account 20, and by P&L account 20. To machine account the last year 20, by P&L account 20. Is that okay? Yeah, come on, finish up copying this.